Hello, everyone. We are celebrating 100K. So I'm going to see. I didn't do a I just put it on the site that I was going live tonight for 2 hours because normally I just do 1 hour. So I'm going live for 2 hours. It's going to be an Ask Me Anything. So I'm excited about this while we're waiting for some people to get on and ask their questions. So today the Fed raised interest rates 5 basis points, which is like 0.5%. So that's a lot. So thank you so much, Nadira. I appreciate it. So interest rates are more than likely going to increase. We're at about 5.5% on average in the country. So, I want to talk about majority. It's really going to be, you're going to drive the discussion tonight for the most part, but it's really going to be about people feeling like they're permanently priced out or they're priced out of the market. I'm going to take those questions. I'm just going to talk about anything that you guys want to talk about. So put your questions in the chat. Thank you everyone on the 100K. I really, truly couldn't have done it without you. People telling me, Shahida, fix your audio. Shahida, do this. Make sure you make a video about this. I truly listened to whatever you guys needed, especially as you were buying your first house. And that became my content. So I just think, I definitely wouldn't be here without you and your guidance and you watching my videos, sharing my videos. I've only been on YouTube consistently for about 2 years. And so I'm really proud of what we were able to do on this channel in a short time. And I don't know how many people I've gotten over the hill to home ownership, but I know it's a lot because y'all come back and tell me. So I'm really, really proud of you and proud of me for you guys taking the leap and, allowing me to come along on your journey through every part of the home buying process. I really appreciate it. Hopefully my Wi-Fi is doing good. I still don't have it hardwired, like it's really Wi-Fi, but I'm working on that as we speak to have it hardwired in this room. All right, so let me go back. Thank you, Nadira. Thank you, everyone. I don't have any twin sisters. I do have 3 sisters, but nobody's twins. Let me see. Do my fiance and I have to have a joint account in order to buy a home together? No, Nadira, you do not have to have a joint account to buy a home together. I do have a video on buying a house together or buying a house married, that sort of thing. So please watch that video. Watch 2 videos. One video buying a house married, and then I have one video buying a house with other family members or just with other people, some of the things you need to think about before you do that. All right. Thank you, Tiara. Thank you so much, Maine. Let me say, do you know anything about the 90-day flip rule when it comes to rent-to-own homes? Yes. So it applies to FHA loans when somebody buys a house. So say, an investor buys a house with the intention of selling it back, fixing it up and selling it back, or just, selling it back within or less than 90 days. They will not be eligible for an FHA loan because that they don't allow. FHA needs some time that home to be on the market or that home to be owned by that secondary party for at least 90 days. So if you're an FHA buyer, you can't even make an offer on that home to the 91st day. So there's a 90. So if somebody buys a house, puts it back on the market for sale, and there's an FHA buyer that wants to buy that house, they have to wait 91 or 90 days so you can make an offer on the 91st day. So often you'll see homes that are bought by investors, if they're bought by Open Door, OfferPad, any of those like iBuyers, you have to wait at least 90 days before you can buy it if you have an FHA loan. If you have a conventional loan, you don't have those same restrictions. So you can buy a house whenever. But FHA loans specifically, you need to wait 90 days to buy that house. All righty. I'm making sure I don't miss any of you, especially the people that came and signed in early. Can I buy a home with CDs and bonds? Yes, if you cash them out. Okay, you can't bring your, have your CDs transferred to buy it, but you can, cash those instruments out and then use that money in order to buy the house. So honey pot queens, yes, you can, but you have to make it liquid. You have to make the bonds and the CDs liquid into cash. All right. Can you negotiate between lenders? This is from Higher Vibrations. Yes. But you need to make sure you get quotes from, I always, like one of the Shahida rules, right, is to make sure you're getting 3 lender quotes. So if you're getting 3 lender quotes, then you can negotiate. Well, this lender told me, it was going to be this much in lender fees. And this, can you meet that? This lender is offering me this interest rate. Can you meet that? So you have to have multiple quotes. You can't just have one quote and tell the other person, well, I need this. You can. The other way you can do it is if you only have one quote, then you tell the other lender or lenders, this is what lender 1 is offering me. Can you beat that? And just remember, everything is floating. So the main things that you're negotiating are lender fees, interest rates. Everything else like title company, closing attorney, taxes, those sorts of things are going to be the same with different lenders. So, those things don't change much. And people think that they do. So, when you're looking at your loan estimates, you're looking at things that are negotiable. Like a lot of the things that you're getting aren't negotiable. It's mostly the interest rate and any fees, points, that sort of thing that the lender is charging you for that rate. All righty. Thanks, Maine. And I'm going down the list. Can I purchase my second home if I already have purchased my first home 2 years ago? Yes. You can purchase, 5 homes at one time if you have enough money. There's no set time for you to buy a second home or an investment property. It just depends on where you are financially. If you did an owner-occupant loan, so if you did an owner-occupant loan, they expect you to be in that house for at least 1 year before you can rent that out or change it into an investment property. But, to buy another house, you can do that at any time. All right. Thank you so much, lovely Lisa. Wanda, thank you. And happy Teacher Appreciation Week, everyone. So if you are teachers, and again, if y'all know me well, I used to be a teacher for 14 years. I am going to have a live just for teachers. So stay tuned on my channel, share it with other teachers, because what I wish I had known, prior to this is how YouTube is a really good second revenue source or maybe a primary revenue source for teachers. Whatever you're teaching in your classroom at any grade level, you can put on YouTube. So I'm going to do a special teachers only live just about YouTube and how you can use that as a secondary form of income. Because I know a lot of teachers have second jobs that, work them part-time after school, that we work them on, during the summer. And YouTube could be a good option for you. So stay tuned, all you teachers, and happy Teacher Appreciation Week. If you have children in school and if you haven't got given your children's teachers, a teacher appreciation present of some sort, even if you don't have any money, have your child write a letter to the teacher saying how much they appreciated them this year. They would love that. But don't let this week go by without thanking your teachers, your parents, thanking your children's teachers. If they're in high school and they have multiple, figure out what to do, but you should definitely be thanking teachers this week. All right, Sylvia, thank you so much. I appreciate that. Always a lady. Hi, how you doing? Thank you, St. James. You helped me purchase my first home. I really appreciate that. If y'all want to give me a review on Google, I would appreciate that. If you just put in Shahida Hill, it'll pop up. Give me a review if I helped you buy a house. I would appreciate that. Wesley, Black Romance Narrator, you helped me. Okay, you writing some books. I really appreciate that. Thank you so much. Okay, MK, may I be approved for a Bank of America first-time homebuyer grant if I have $24,000 in my savings? I honestly am not sure. That's something you could probably get answered pretty easily, by asking one of the lenders. But what he's asking is, and this is common with a lot of down payment assistance programs or grants, they try to not give it to people that have a lot in assets. So, there might be an amount or a percentage of the home price they don't want to see in like your savings account. What doesn't count? Retirement accounts really don't. So if you have $100,000 in your 401k or your Roth IRA, they typically don't look at that. But if you just have, 24,000 sitting there, and then their cap on savings is 15,000, then they may say you're ineligible. But I'm not sure about Bank of America specifically if you're allowed to have, a certain amount of savings. It really is unfortunate because a lot of people have saved, and then now they can't qualify for down payment assistance. So I would just send a email to a Bank of America lender, like through the program, and see if they have an asset limit to qualify for the program. So just say, do you have an asset limit for people to qualify for that grant? How much people can have on hand? Malika says she missed it. I'm not sure what you missed, but if you just put it in the chat, I might get to it. All right. Thanks, Nira. Watch those. I need to do my top 10, like the top 10 videos that I like, not just the top 10 videos that get the most views. But that is that kind of the buying a house married. I kind of go over how my husband and I do our finances. So it's a good video, in my opinion. I made it maybe a year and a half ago, or maybe almost, a while ago, but it's a good video. All righty. Evan, Everlasting. Congratulations on the 100K. Thank you so much. Okay, sorry, y'all. I'm not even clicking on these. I'm going to click on these so y'all can see them. All right, congratulations on the 100K. Have you found HOAs and covenants restrictions for condos in multi-unit buildings any less or more restrictive than those for single-family homes? It depends. Okay, so all HOA restrictions don't restrict typically things inside your home, like what you can do or what you can put inside your home. But it's what you have outside your home they're most concerned about, like what other people can see. And sometimes it may be like if they can see your curtains right from outside the house and they're like bright pink, then that might be an issue. But for the most part, anything inside your home, they're not worried about. But if you go to condos where you share walls and that sort of thing with people, they may have more restrictions to avoid any problems because y'all share so many systems. In a single family property, you don't share your HVAC, you don't share your electric, your plumbing, your pipes, all of that. So they may have more restrictions for condos and multi-unit buildings. So they make sure that everything within those units stays in good operation, right? So they don't want you putting certain things in your home that might impact somebody above you or below you. So I would say that they are a little bit more restrictive in multi-family than in single family. Single family is more concerned with outside your home and the common areas. But thank you for that question. I'm going to put this one. Higher Vibrations went to Chenoa, and their monthly payment was higher than every other lender, even though their interest rate was less. And they wanted $17,000 in closing costs. How is that possible? I'm not sure, because usually the Chenoa interest rate is a little bit higher. So what you need to do, Higher Vibrations, is take the Chenoa loan estimate, and then you're going to take the other loan estimate and go by line and see where the discrepancy is. Where are you being charged more? Because it can't be apples to apples, because what you say is they want $17,000 in closing costs and the monthly payment was higher. So what extra fees are in there? Since they have the lower interest rate, there has to be some other fees that they're including. Now, sometimes when you're comparing the two, so say Chenoa is saying they want 6 months of homeowners insurance in reserves, where another lender is saying we just want 3 months of homeowners insurance in reserves. So then it's not that you're necessarily paying more, you're just putting more in reserves than another lender is requiring you to. So you want to compare both of those things and then, see which one it makes most sense for you to pay a little bit more upfront in some of those reserve items. And when I'm talking about reserves, they're going to have you put money aside for your taxes. They're going to have you put money aside for your homeowner's insurance. And then if you have mortgage insurance, you'll be paying that with your payment as well. So you want to look at those things. I have at least 3 closing cost videos where I go line by line as to some of the things you may see in your closing costs. So you want to, watch those videos and then compare the two to figure it out, because there's clearly some other fees or Chino is estimating differently than the other lenders are estimating what your taxes and your insurance and that sort of thing will be. All righty. Let's see. Darwin. Hey, Shahida. What strategies did you apply that really started progressing your real estate career? Being consistent, honestly. Okay, so let me tell y'all a quick story. So I was always going to quit my job. So I went from teaching full time the year before. So 2019 to 2020, I was teaching full time, and I was doing real estate, and it was doing decent, right? But still not making enough money. So I told my husband I'm going to teach part-time, and part-time just cut my salary in half. But I said I'll be able to make it up with real estate. And then when the pandemic happened, I went ahead and said, well, this is working out because, well, let me say it's working out. When it first started, I was kind of scared because I didn't know if the market was going to crash automatically, right? Because everybody was in their houses. So, but I still didn't, sign on for the next year to be a part-time teacher. I said, I'm going to go ahead and give it all, like my all, right? The following year. Now, YouTube was a big part of that. But I wasn't like a national YouTuber. I was a local agent that had a YouTube channel. If you go back to my oldest videos, they're all about Atlanta. And I really focused on an Atlanta first-time homebuyers and Atlanta, down payment assistance programs. Those were like my focus. So I had a lot of videos on the down payment assistance program in Atlanta. So I got a lot of business. Like a majority of my clients, I would say 80% of them wanted to do that program. Not all of them qualified though. So even though they came to me wanting to do that program, maybe only half or maybe 30% actually qualified, but I still was able to get those clients and close them. And it wasn't until, so I'm getting like a lot of leads from YouTube, a lot of leads. And I did one video that wasn't Atlanta specific, and then that did well. And then that kind of, catapulted me, I guess, to not just do Atlanta videos anymore. And I do, for all the agents, I do have a YouTube for Agents class. In all of my videos, I have a link to the secrets of YouTube for real estate agents, something like that. I forgot the name of it. But if you download that guide, you're basically on my mailing list. And you could, if you Google Shahida Hill on Facebook, we have a Facebook group. So if you're interested in YouTube specifically for your business, I can help you with that. But that's the majority. That's how I got from where I was pretty much to where I am now. But thank you for that question, Darwin. I forgot to click on your name. All right. Let's see. Shonda, would you consider it a wise choice to purchase if your payments are increasing $750, but after budgeting all bills and savings, there is still a surplus of $800? I'm very nervous about my purchase. Now, $750 is a lot, as a difference, right? They're increasing $750, but if I'm making $500,000 a year, that's not a big deal to me, maybe, right? So you're really going to have to see, like you said, you have a surplus of $800. Is $800 enough for you to have, when you say surplus, like after all your bills are paid, you have $800 left? And if something was to happen, wouldn't it be better to have $1,500 left? And I say this because, and I've told this story before, when we bought a house, we qualified, for like $275. Like it wasn't a whole bunch of money. And we went to $250. We're like, we're not spending more than $250. Now this is in Atlanta. You could back then get a house for $250. We capped ourselves at $250, because we had 2 children in daycare, and that daycare bill was, like $1,400, something like that, because they were both young. So you have to know your own budget. So I don't know if $800 is sufficient for everything else that might come up in your life. And you have to have a comfort level with that. I think you shouldn't pay, and I've gone back and forth, 25% of your take-home pay is ideal for you to be in that area. But if you were trying to push it out, like maybe to 35%, because think you still have to maximize, save for your retirement, invest your money, do other things. If you are spending so much on housing, then that might be a problem. But you have to do that with your own budget. For some people, that's not a big deal. For other people, it is. If you're having a little bit of discomfort with that amount, I would probably pull back on the price of the home, and maybe you're not going to get the exact home that you thought you were going to get. But yeah, so I would make sure that it's comfortable for you and your budget, because you were planning on spending one thing, and like overnight or a couple of months later, you're spending something else. So you clearly weren't planning for that, to live like that, or to miss that $750. You really need to go over your budget and say, what else could I have done with that money? Is that home worth it? Or should I reduce the cost of my home so that's not such a drastic amount? And if you find yourself above that take home pay, when I say mortgage payment, that's taxes, insurance, HOA, everything you have to pay every month. If that amount is more than 35%, ideally 25%, right? But if you're like up to 40% or 50%, you don't need that house. Like you're taking too much of your take home pay toward housing. Unless you want to get a roommate or have somebody rent out something from you, it's a lot of your money going toward your housing. Thank you so much for that question. I keep on forgetting. I'm going to click it right now. Thank you, Shonda Berry, for that question. And that's what a lot of people are going through right now, because, especially if you're getting a home built, if they were building like in November and they're still not done yet, you went from probably like a low 3 to like a 5% interest rate, or 5.5. And interest rates haven't risen this quickly in a long time. This is the first time, I think, in 22 years that the Fed has raised interest rates by this 0.5%. So this is not, a usual thing, definitely. All right, thank you. Just want to say I love what you wear here. I didn't know if y'all was gonna recognize me in these braids. I thought I said they're not gonna recognize me, but I went to Mexico for my mother's 70th birthday, and so I had to get braids. All that humidity and water and stuff like that. So thank you so much. All righty, Mimi Allen, we're building our home. Let me see. I'll put that on here. Oh no, we're building and our home will be ready in August. Praying for earlier. If the interest rate goes higher than what we can afford, what are our options? Okay, thank you. So it really depends on your contract. And in my video, where it has 5% and the arrow going up, I talk about different options. But you're going to have to see, worst case scenario, you terminate that contract either because of financing contingencies. So, you can't afford it anymore, and you're able to get out of the contract based on a finance contingency and get your earnest money back. Worst case scenario, based on that contract, you terminate it, you may lose your earnest money. And I don't know how much earnest money you put up or how expensive that's going to be for you, but you definitely need to look over your contract. If you're not sure, you need to have an attorney look at it for you. You can have your agent kind of advise you a little bit on what it says. But ultimately, if you're thinking about terminating your contract with a builder, I would have an attorney look it over. Now, how you get a free attorney is if you have an agent, your agent should have a good enough relationship with closing attorneys to maybe review your contract either for free or at a very reduced rate. And they can tell you what your options are if you had to terminate based on financing or based on any reason, really. So find out what your options are if you have to. Because I would rather, say my earnest money was $10,000. I might rather lose my earnest money for $10,000 than to be stuck in a house that was $500 a month more than I planned on. I pretty much make my money back in about 2 years, I guess. So, you really have to think it through. I know there are a lot of people who had their hopes and dreams on one thing, but the world kind of changed, and it changed quickly, and you have to adjust to it. Hopefully you didn't take pictures in front of this house on like Facebook or Instagram. Nobody will know. All righty, let's see. All right, let me go to this one. Doug Bones. Hi, Doug. If you are renting the home that you live in and then one day you want to purchase it, would you need an appraisal done to the home in order to receive a mortgage? Yes. Okay. A mortgage company is going to require an appraisal before they loan you money. So say the owner says, I'll sell you this house for $500,000. And you go, get approval for $500,000. The lender needs to see, is the house truly worth $500,000 before we loan it to you? Because worst case scenario, you stop paying your mortgage, we're going to come take that house as collateral, and we need to know it's worth $500,000. So that's why appraisals are done with any kind of financing. Sometimes if you're putting 20% or more down, you can waive the appraisal, but more than likely the lender is going to require an appraisal. Okay. Thank you so much, Doug. All right, y'all saw my little switch up. Normally I have this, but since we're celebrating 100K, I have my little YouTube award. Not little. I have my YouTube award, but this will go back up for the next video. That's like my forever sign. All right. So thank you. Always a lady. If you've learned anything from this channel, please like this video, thumbs up. Please like this video if you get a chance. That helps with the algorithm. Like if a video gets a lot of likes, then YouTube pushes that video out to other people. So I really appreciate any likes, any comments, shares, all of that kind of stuff. I appreciate it. All right, another but for chair. I'm trying to read it before I put it up. Okay. I got 3 lender quotes. When I told them I had other lenders, I said I was just doing my due diligence as a consumer, but they got mad. Let them get mad, okay? Lenders aren't, and same thing with agents. I think the majority of people only interview one real estate agent. Like they don't compare real estate agents. They just hire you and that's it. And so lenders, I'm sure probably are used to the same thing. People come to them or they're referred to them by a realtor, and they're not used to people going back and forth and trying to figure out what's best to do. But that's their job, to earn your business. Don't just give your business away, not ever knowing what other terms you could have, got from another lender. I've been at closings, and the benefit I think of agents that we don't share enough is that we pretty much at some time or another through our transactions may see what interest rates our clients are getting from different lenders. And I've been at closings before where, they just came to me, they already had a lender, they knew who they were going to use. They didn't shop it around. And I'm like, oh, your interest rate is that? And I'm thinking y'all could have gotten maybe 0.5% less and that sort of thing. So you have to just do your due diligence. If they're giving you pushback on it, that's probably part of their sales. Like these lenders go to sales trainings and they have like what to say if they say they have another lender, what to say if they give you pushback on that. They're salespeople for the most part, because if you ever watch my video that says who's the most important person in like the 9 most important people in the sales process, it's the lender, the processor, the appraiser. All of those people are working together, these 9 people. Once the lender pretty much gets you in and gets the pre-approval and you get under contract, they hand you off to somebody else. So it's like a numbers game. They're trying to get as many people in as possible because they know not everybody's going to close. So it's much better for them to get people that only have one quote than to be more risky with people that have multiple quotes. But there was a story for Wells Fargo where like almost 50% of African-American refinance applications were denied. Imagine those people that only did one quote. They only went to Wells Fargo. and they were like, oh, my application is denied with Wells Fargo, they could have gotten a refinance from 5% to 2% with another lender, but they may be only quoted at one place. You are going to save money if you quote typically at least 3 places, either in fees or interest rate or both. And I did a video, like when I interviewed some of my clients, it's an older video, but I interviewed some of my clients. It was my resale clients. He did 6 quotes. Now, that's not what I recommend, but he did 6. And he said it was well worth it. His credit did go down because he did 6 quotes, not over like a 14-day period. He did it over like it's a month's period, right? But he said it was worth it because he saved considerably by figuring out, like he did Rocket Mortgage, he did a local lender, he did like a whole bunch of lenders, and he said it was worth it. I will make it a note to post that video in the comments of this video. Thank you. All righty. All right, this is a good question, and maybe y'all can help Bailey Embry out because he is asking, he's a new mortgage loan officer. What traits do you look for in a quality loan officer? So I did a video, and if you're in my Facebook group, my first time homebuyers Facebook group, I kind of ran the title of the video by them, and I was going to name it "Your Lender is Trash," right? But I didn't because, I was trying to be respectful of the lenders. I named it "Should You Fire Your Lender?" Okay. So a lender needs to be helpful even if they are not 100% sure that you're going to buy a house. And what I mean by that is, so if a lender gives you a pre-approval and you're not approved, that lender should say, you know what, you're not approved now, but this is how, almost like a little counselor, these are some things you should work on, because now they have access to all of your information. They have access to your credit. They have access to your income. In order for you to get where even if you never see this person again, you should counsel them to say, this is what I suggest for you. That's number one. You need to be less of a salesperson and more of like a counselor or a guide, because you never know if that person is going to use you again and feels comfortable with you to say, or they will refer you to new people. So don't just say, well, this is not a sale. And that's what a lot of lenders do. Like, this person, they don't have what they need to qualify. I'm not even answering their calls anymore. Like, that's a done deal. So I say that's number one. If they are using you and they have chosen you as their lender, you need to give them a loan estimate as soon as possible. It doesn't have to be an official loan estimate, but they should know what their payment is going to be. And I know that the interest rate is floating, but at that point, you need to give them an idea of what their payment is going to be, with their taxes, insurance, everything, without them asking. A lot of lenders give you a pre-approval, and then they're like, oh, and then you have to ask later for a loan estimate. And then they're surprised about their payment. So I would definitely do that. And then lastly, throughout the transaction, answer your phone, answer your emails, because once they get the business, you transfer them to a loan processor, you're hard to reach, right? Or some lenders are hard to reach. You never know how many people I have that, like, my lender's not calling me back. I don't know what's happening. Even if there's nothing happening, you need to say, well, I will, email you or call you every Wednesday regardless. So at least they know what's happening with their file, what's happening with their closing. So those are my recommendations. But if you have any other recommendations for Bailey, make sure you put them in the comments, like something that your lender did that was exceptional, I guess, to help him out. And then watch my video, Should You Fire Your Lender? Thank you, Miss D. I appreciate it. Big shout out to Mrs. Shelton 226. She's a 3rd grade teacher. And don't we always remember our elementary school teachers? I honestly don't remember a lot of my high school teachers, but I remember all of my elementary school teachers. So keep up the good work, Miss Shelton. All righty. Let me answer this question. As a cost-effective way of buying a home, my husband and I are currently looking into this. I'm going to take that back because I don't know if you posted something earlier, because I don't know what you're talking about, I don't think. . 'Cause All right, Mommy Berry official. Is it fraud if someone says they are going to own or occupy, but they use it as a rental and that was always the plan? Yes, it is fraud. It's mortgage fraud because they're going to have you sign something at closing that basically says, I intend to own or occupy this house. And if you never intended to do it, then that's a problem. Now, will they find out? That's, debatable. They may never find out. And sometimes, so say that you are relocated for work 2 months after you buy the house, then that's not going to be an issue. Now, some people say that FHA or, Fannie Mae, Freddie Mac, they might do like audits every once in a while and check to see if people are still living in these homes. Generally, they do it electronically based on like where your mail is going, where things are. Like sometimes you might change your address for where you get your tax information, things like that. That might be like a red flag. Or if you, during underwriting, maybe you applied for a renter's policy or a landlord's policy instead of a homeowner's insurance policy. They may find out ways like that, but it is fraud. You just never know if they're going to find out or not. So I would say don't do it. But yeah, it is fraud. All right. Thank you, everyone. Okay. I have a super chat. Hi, do you know much about doctor's mortgage? You gonna be a doctor? Let's see. While you're hang gliding. Okay. I don't know a lot about them, but there are doctor's mortgages. Just not every lender has them. So what I tell people who are, going to be doctors, I had a student that became a dentist that got a doctor's loan. And because usually doctors have high student loan debt, but they also have high income potential. So they have special loans for doctors, physicians, that sort of thing. What I tell them to do, especially if they're interning or if they're in residency, they're around other doctors all day long. So they should ask them, who did y'all use to buy your house? Who did you use to buy your house? And you'll get some referrals in that area, and you'll be able to know what are the best loan programs for doctors, because a lot of doctors use, doctor loans or doctor mortgages. So that's my recommendation to you, to find out like what lenders offer them and what are the best terms, rates. They may not tell you all their business, but a lot of doctors will tell you, oh, we use this person. This is who we used when we bought a house. So yeah, I would just make sure you are networking within and I'm sure there are some lenders that will come to you as well. So I would network in that group of physicians to find out what is the best loan for you. Oh, can you use grant money with conventional loans? Yes, if the grant money is linked with a conventional loan. A lot of the grants and down payment assistance programs are sometimes FHA products, but they may be conventional as well. So like the Bank of America program is conventional it can be either one, but that's a grant that's conventional. So the answer is yes, but it depends. Like you can't just, if there's a down payment assistance grant or a down payment assistance program and they're FHA, you can't say, well, I want to do conventional. It's just, that's the program. That's how it works. All right. I'm having fun, you guys. I'm going to make sure I can stick with this 2 hour commitment. All right. So thank you, everyone that's celebrating the 100K with me. I appreciate it. Thank you, classy lady. Let me see what you say. Congrats, Joy Allen. Thank you for everything. Is it wise to take out a home equity loan to pay off other debt if it will give you an extra $2K per month, even after you make the second loan payment? That does sound enticing. So I'm going to say no, but it's your money. And the only reason I'm going to say no is now you're putting a loan that is unsecured. So your credit card debt, let me see. The other debt, I don't know what all you're paying off, but say it's credit card debt. That debt is unsecured. So they can't come. So when you don't pay your credit card, they don't come and take your clothes that you bought or take whatever. It's unsecured debt. But when you're attaching a home equity loan to, you're going to consolidate it in a home equity loan. Now that home equity loan is attached to your house. So if you, for some reason, can't make those payments, they could possibly come and attach that to your house, either through a lien or foreclosure, that sort of thing. So it's not a good practice in general to take unsecured debt and make it a secured debt. So that's not a good general practice. Now, it seems like you're saving a lot of money doing this. So if you know for sure, like, I'll be able to get out of debt completely in 1 year or something like that, then that might work. But in general, it's not a good practice to take unsecured debt and make it secured debt through a home equity loan. Okay. All righty. Thank you, Quandette. I appreciate it. Let me see what this question is. Theo, like the Cosby Show. Can you teach us how to buy a owner-occupied home for parents who don't qualify on their own? So you would pretty much have to be their co-signer. That's what I'm thinking. So if you have parents that don't qualify for a house, either you can all together put your incomes together and qualify together, and you own that house together. I've done a video on multi-generational living and buying a house with parents. I want you to watch that video, but that's pretty much, you're going to put your income with their income, and now you qualify, right? Or you can just buy a bigger house and move them into it. That might be easier. So, but that's basically how they need a co-signer. They need more income probably, or if they need more credit or whatever it is, you're adding them to, you're adding your income, your credit in order for them to qualify for the house. Or unless you're just buying a house for them and then having them move in. So either one of those, it's just a matter of, it's not because they're your parents necessarily. You could buy a house with anybody. If everybody's making a little bit of money, then you all can qualify together. You can have 5 people on a mortgage, right? So there's no special thing as far as parents are concerned, but please watch that video about multi-generational living and things you need to think about with, buying homes with family. Thank you, Theo. All righty. All right, Lenice Smith. Any advice for purchasing a home with rates rising? Do you think home prices may drop a bit? Okay, so home interest rates right now at about 5.5. The Fed raised rates today, and they may go up a little bit towards 6%. So my number one thing is set your budget. If you have, the highest I said was, the highest amount I said was, what did I say? 35%. That's the highest I've ever said, 35%. Don't go any higher than that. Take home pay of your take home pay. So if you're at that, that's your cap. I don't care if interest rates go to 10%. The most house you're going to get is in that amount. You can't say, well, let me push to 40% of my income. Let me push to 50% of my income just because interest rates went up. You personally should have a cap of what you're willing to pay for rent, for your house, for your mortgage. You have to have a personal cap. So that's number one. So rates could rise 20%. Your cap doesn't move. Like you say, well, it costs more. Let me do it. Now your strategy may have to change if you still want a house. And I did it like a list of 10 things, moving farther, buying a house with somebody else, like doing some other things, not buying so much of a house, right? So you have to change your strategy, but your cap, that 35% should not change at all. It should not change. All right. What is this, Christina? Oh my goodness. Let me get you on here. I know Christina, let me get this one off first. Christina, can I even see your super chat? Hold on. I see it at the top. See, that's why I need your husband to be my person. I see it now. All right. If y'all haven't seen Christina Smallhorn's page, and put it in the comments if you have, but she has an amazing channel. I think she's almost at 200,000 subscribers. And I'm going to have her on this channel. We just haven't worked out a time because she does a lot of work, a lot of videos. I know she has a lot of videos on a lot of real estate topics, but some of her like really amazing videos are on tiny homes or like alternate, ways to live affordably. And so I want to have her on to say, are tiny homes the answer to affordability? And I know she has a video on her channel most recently of how they, built a house in like 28 minutes, that sort of thing. So if you're interested in tiny homes, please check out Christina Smallhorn's channel. It has a lot of good information. I was on her live stream on Sunday. So I really do appreciate, it's like a little community that we have as real estate YouTubers. Christina, so thank you so much for the super chat. I really appreciate it. And then I'll put her channel, or somebody help me out and put her channel in the comments so people can find that. Thank you so much, Christina. All righty. I'm gonna go back up. Okay, let's see. Hopefully I'm not missing anybody. And I said I was gonna give some shout outs, and I haven't seen Elle. I feel like you're Elle, Linda. I wrote my list, but there's Chef Brooklyn. So Elle, Linda Fernandez, Elle. I keep on saying her name. Elle, if you're on this stream, let me know. She's always on my streams, but I haven't seen her comment lately. So Elle, Linda, Chef Brooklyn, Justin C. Those people are consistently commenting on my videos and supporting me. So I wanted to give you a shout out on the channel that I really, really appreciate you. Some other you I do see often as well, but I've seen them when I had like, 500 subscribers. And I just really appreciate them being consistent with me and helping me. Like if you've ever seen me put up a video and take it down, it's probably because one of them said like, the sound wasn't good, Shahida, or you messed up on this part, or what about that? And I just take it down immediately. So thank you guys. Shantae White, thank you so much. I found them a house in, her and her husband, a house in Cherokee County. And it's a suburb of Atlanta. So hopefully they're enjoying their home. Thank you for checking in, Shantae. I appreciate it. All righty, let's see. What else? Congratulations. Thank you so much. Giovanni, I'm so proud to see a Black woman becoming successful. You're truly an inspiration to many. God bless you and your family. I appreciate that, you guys. We do. One of the things that I try to talk a little bit more about when I can is the wealth gap, right? So we have a home ownership gap in the Black community. We also have a wealth gap, and both of those things are closely related because only 44% of African Americans own a house, okay? And that's compared to 71% of white America. And I think Hispanic, Latin Americans, they own about 50% of housing. So we do have a gap there. And I think if we, as much as possible, there's so much education, there's so much information that we can take advantage of to make sure this is one area. And the reason why home ownership is so important, there's a lot of reasons, but one is just the stability that you're able to have financially, where I know a lot of people are very impacted by rent prices going up 30%, 40%. But if you have owned a home, then your prices are much more stable. Your mortgage is much more stable. And even though your taxes can go up, your insurance can go up, it doesn't go up 30%, 40% typically in 1 year. So that's something, and I've said it before, I don't know, when my tax bill comes out for 2022, I'll probably do a video about it. But from the time I bought, my husband and I bought our house in 2016 to 2022, our combination, taxes, insurance, everything has gone up $50. So we only pay $50 more than what we paid in 2016. And a lot of people can't say the same in their mortgage payment. In their rental payment. So, and I'll let you know because the value of our home has gone up over the last 2 years, but I don't anticipate it being like drastic. It might be $75. I'm not sure. But it's not what I'm hearing from renters saying that, we can't afford this anymore. And that's another reason why you want to be conservative, right? When you're buying a house, we had that the viewer that said 750, like my mortgage payment is going to go up $750 for the house that she's buying. But what if you're on top of that 750? What if your taxes go up a little bit? So you have that to factor in as well when you're thinking about your cost. So it's always good to stay very conservative when you are thinking about what your mortgage payment is going to be. And if you are, we said this on Christina Smallhorn's channel, if you are not homesteaded, like there should be a homestead exemption. If you are living in your primary residence, most states have some kind of homestead exemption. Georgia does, and that will save you on your taxes. And they also have senior exemption. So once you reach a certain age, your taxes either freeze, so you don't pay any more taxes, or there's an exemption altogether. My county, 62 and older are exempt from the school tax, which is the majority of the property taxes. So if you have relatives that are seniors, you need to find out, because you don't want to have people losing their homes over taxes when they were exempt from them. Your county or your municipality is not going to tell you, happy birthday, you're 62, no more taxes. You have to apply with them to get the exemption. And that's the same thing for a homestead exemption. Make sure you are getting all of your tax exemptions. Make sure your grandfather, your grandmother, your aunts, anybody that's in that senior. I had to tell my mom, go apply for your senior exemption because she wasn't aware of it. So you need to make sure that you are, not paying more taxes, property taxes, than you have to. There's also like usually veteran exemptions, veterans with disability exemptions. They have a lot of different exemptions on your property taxes. So make sure you're looking, for those. Thank you so much, Giovanni. All right. Hello, I'm from Chicago. Do you think 2022 is the right year to purchase a home, or do you think rates will be better in 2023? I don't think rates will be better. Rates are expected to keep on increasing for the most part, right? With the Fed. So as the Fed raises rates, the interest rates will go up because it's going to be more expensive for banks to borrow money. So I think that they will continue to increase. Now, and I think I didn't answer that other question fully about will prices decrease? And I would say so far, no. And even at rates at 5.5%, there are still multiple offers on properties in Atlanta. So there's still low inventory and there's still a demand. So I don't think there's as much demand, right? So there's not as much demand as there was in spring, summer 2021. So some people have backed out and said 5.5 is too much for me, but there are still some people that are still in there, and there's still more buyers than homes. Okay, until that evens out, right? Until there are more homes than buyers, then prices are not going to decrease. So the answer to your question is, when there are more homes than buyers, you will see homes decrease. Now, at what interest rate are people going to leave the market? It hasn't been 5.5. Is it 6%? Is it 6.5? I watched something recently and they said it was 6.5. So at 6.5, enough people leave the market that perhaps there are more properties than homes for sale. But I said also, people are moving situationally. They're not moving just to move, because if somebody has to sell their house right now, guess what? They're just like you, paying 5.5%, 6%, where they are now, if they refinance or if they bought within like the last, 10 years or so, they probably have a 2 or 3% interest rate. So why would they sell their house to go buy a more expensive house where they'll probably get less for their money, plus pay double in interest rate? So a lot of people aren't incentivized to sell their house. So it won't be resale inventory. And on the new construction side, they're low on supplies, they're low on labor, so they may not get inventory that quickly that way. So it has to be that these interest rates go high enough that enough people say like 6.5%, I'm out, 7%, I'm out. But then if you're still there, guess what? Those houses are still expensive. They're not going to go down. Say they go down 10%, but they go down 10%, 15%. say $100,000 house is going to go down to $80,000. But is that $100,000 house better at 3%? Or is that $80,000 house at 6.5%? It's probably more expensive, right, at 6.5% for $80,000 than it was at $100,000 for 3%. So that's where you're at. Like, at what point does the house price have to fall in order for it to make sense for you to wait a long time for that to happen, if it happens at all? And so that's something it didn't work for the people for the last 2 years. It hasn't worked out for, like, the people that were waiting on the crash, waiting for that crash. It didn't happen. And so I think prices, as they keep on going up and up, there will be more and more people that come out of the market, but I don't think that home prices will fall enough for it to make sense. I think that's my official answer. I could be wrong. I do think it'll be easier for you to get a house. I think sellers will get less offers. I think sellers will start offering closing costs again, and they may be more flexible. So instead of paying all of your closing costs, they may pay all of your closing costs. Those types of things will become more normalized as it was in the past. But that's what I think. I don't think home prices, if they do fall, will fall enough for it to balance out that you're paying this higher interest rate. All right. Thank you, Shamika. Okay. Let's see. 180, I guess it's 180,000 in student loans. Okay. I want to do a video on this. Do not pay your student loans, off, right? President Biden did say that there's going to be like a major student loan announcement. So if you're planning on paying off your student loans this month or next month, don't do it. I wouldn't do it until after August 31st, because there's going to be some announcement between now and August 31st regarding student loans. He said it in multiple news outlets. I think his press secretary has said it. It's already out there. They've released some changes, of course, to some of the programs. And I need to do another video about that. But if you are planning on paying off your student loans in the next 2 to 3 months, I guess, don't do it. Wait for this announcement, whatever it's going to be. All right. So Shonda has $180,000 in student loans on IBR, which is income-based repayment plan, and a 0% payment. And that's one of the changes they made, because some people were on forbearance. They couldn't afford their payment. So the student loan servicer put them on forbearance or deferment, I guess, instead of them paying, when they could have been on an income-based repayment plan. And when you're on the income-based repayment plan, even if your payment is calculated to be 0, those non-payments still count toward forgiveness. And so they added a waiver for those payments that you could have been not making, to count towards your forgiveness. So there are multiple waivers out now to get more and more people toward forgiveness. So make sure you're paying attention to that. All right. I make only $40K. Lowest credit score is 690. What's the best program to buy a home? Have significant other that has good credit, no debt, income as well. So you don't make only $40,000. We got to find out that significant other and put those two things together. So it really depends on what the best program is for you. If you'll qualify for conventional or FHA. In this environment, conventional, it'll be easier for you to get your offer accepted, but you really have to get pre-approved and have that lender go over, is it FHA, VA, USDA that makes sense? It will be, like I said, you have, a significant other. So I'm assuming that's going to be 2 incomes together. So, when you both get pre-approved, they will go through and have a lot of videos on, I have a mortgage options playlist, but it's either going to be FHA, conventional, or USDA, depending on where you live. That makes the most sense. And you have to say, okay, for FHA is usually selected for a lot of first-time home buyers because their debt-to-income ratio is a lot more favorable. So you'll qualify for more usually with FHA than conventional. So, but you may qualify for both. So you have to just see which one makes the most sense. And the only way you're going to figure that out is through getting pre-approved. So that's what I would do in your shoes. All right, I'll answer this question. Can you combine the first-time homebuyer grant with the USDA program? There are some grants. This is going to be maybe state dependent. If there are programs that go with USDA, the best thing for you to do is qualify for USDA and then ask the USDA lender, are you aware of any programs that I can use for, down payment assistance? There's no down payment with USDA, but those same programs can help with your closing costs. So you want to just ask and do some investigation to see what programs, usually they're going to be state programs that you may be able to use with USDA. I have a playlist on down payment assistance programs for every state. You should, watch that guy. All righty. All right. Hello, Fidel. Hi, Shahida. Congrats on 100K. Thank you so much. I was able to buy a home a few months back with your help. Do you have any advice for getting started with a second home as an investment property? So congratulations. I do have a video on buying your first rental property. One of the, I think, main misconceptions is that when you're buying a second property or an investment property, let's go with investment property, that you have to qualify for that complete mortgage. And you really don't. They will assume, usually, lenders, that home is going to be rented. So 75% of that rental amount will be added to your income. So if the house is going to rent out for $1,000, they will add $750 to your income, right? That you're going to receive that every month. So it really helps with your debt to income ratio when it's time to qualify. So you don't have to qualify, like you qualify for your first house. They'll include that rental income when you're qualifying for your investment property. So if you liked your lender for this home that you bought, you can go back to them and say, I'm interested in buying an investment property. Can you give me a quote on that? So that's what I would do to get started. I would watch the video that I have for buying your first rental property. I interviewed an investor that does it often. So, you have that information as well. Thank you so much and congratulations. All right, Lachelle, what about the increase of the Federal Reserve that happened today? Yes, interest rates are going up. So, and the next time they meet is in either June or July. So they're going to go up again. So they're going to go up little by little. The Fed estimated that they would raise rates 6 times in 2022. So 6 times. So pretty much every time they meet, they said that they were going to raise rates. So be prepared that interest rates are going to continue to increase. Now, sometimes it's already what they call baked in. The last time the Fed met, they said we're probably going to raise rates a 0.5%, right? So the markets already kind of react to it and they raise rates based on the anticipation of the Fed raising rates. So they may not go up drastically yet, but he also indicated that he's going to raise rates again. So, they're going to go up, over 2022. So just be ready for it. And like I told the earlier first-time home buyer, regardless of what's going on around you, you have to set your budget. You have to set your limit to say, this is what I can do. And that might mean that you have to look creatively outside of what you anticipated for your house. All right. So thank you, everyone. How do I figure out, Raphael, my debt to income ratio? Watch my video about, can you afford a house? And I have like a calculator in my hand. It will help you calculate your debt to income ratio. The name of the video is called, Can I Afford a House? What is my debt to income ratio? So just look out for that video, please. All right, I'm in Illinois and I'm having a hard time to do, what state do you live in? Wait, I'm in Illinois and I'm having a hard time. Does what state you live in affect your affordability? Yes. Okay, especially if you're not making, okay, so Some states have like an affordability index. Like for Atlanta, they said that we are officially unaffordable, meaning our average salaries can no longer afford the average house. So Atlanta was deemed unaffordable, like in the last few months. And that means that, people are still buying houses. So they're even buying homes that are above their means, or there are a lot of people coming from outside of Atlanta buying the houses. Investors, right? People moving from out of state, people retiring, people that are remote workers, that sort of thing. But the average Atlantan that's making average salary can no longer afford the basic house. But homes, guess what? They're still selling, and they're selling to somebody. So yes, if you're making the average money in your state, but homes are above that average, then it is unaffordable to you. So you have to decide, am I going to stay in Illinois, or am I going to move, to the, I don't know if you live close to a major city. Am I going to move further out from Illinois? My niece, who is in the Army, is moving from, I think, Hawaii to South Carolina. She was thinking about buying a house like this. And I said, you need to move down like 150,000. So just because you can qualify for something doesn't mean that you have to pay that amount. So, just be really flexible as to what your limit is and what you're comfortable with. And, figure out, it may not be that you're going to live where you thought you were going to live. Okay. All right. Shelby does it all. You do it all. Okay. I'm currently under contract and my cost to close is changing. The cost to close of all what I need to bring to closing total. Will this increase or decrease? You have to figure out, why is it changing? Is it changing because the interest rate? I'm assuming that you're locked in, unless you're doing, you've locked your rate. Unless you're doing new construction, maybe you haven't locked it. But you need to find out, why is it changing? And that, like, they make those forms kind of complicated, these estimates and that sort of thing. But you need to go down like with a highlighter. Remember, like back in the day with a highlighter? And you want to look at the first estimate and highlight all the major costs, right? And then go to the second estimate and highlight all of those costs. And say you're looking at lender fees, $3,000. And then you go over to the next estimate, lender fees, $3,500. Now that's $500 more. Lender, why is my second estimate $500 more than the first estimate? I'm going to go to homeowners insurance. This says $1,000. Now this one says $1,600. Why is this more than this? Maybe because they estimated that it was going to be $1,000. But then when you went to State Farm for your quote, they said it was going to be $1,600. That's why that changed, right? Now, going to the first estimate, maybe they estimated you needed 3 months of taxes in reserves, property taxes, and say that was $300. So that's $900. Then you go over here and it says $1,800. Now they want you to have 6 months of taxes in reserve. You need to look at both of those things and find out, where are the changes. You can't just say it was $10,000, now it's $15,000, and I don't know why. Get the documents, go over it line by line, and then call your lender, because they give you those documents. I want to have a conversation as to why this is this cost and this is this cost. And you have it in front of you, right? So y'all can go over it line by line. I have a closing cost playlist, and I kind of go over everything in the closing costs that you might see. So I would watch those videos first, and then I would print out everything so you would understand what you're looking at. Because this is not the time to be, oh, the lender said, or the lender said. You yourself needs to be able to understand everything that you're signing, everything that you're paying for. Because once you sign those documents, you can't go back to the lender and say, you charged me $2,000 too much, right? So just make sure that you're fully aware of what you're doing. All right. Thank you so much. Shelby does it all. All right. Shantae, you back? And I got to see. I learned from Christina's super chat. Shantae. And Shantae, husband's name is Preston. Let's see. Okay. Yes, we are finally settled in and enjoying the house. We are so grateful to God for you for advocating for us and walking with us through a scary and stressful process. Blessings to you and your family. Thank you so much. Y'all were a pleasure to work with. I can't tell everybody everything I did, but you know, and I know. But sometimes you have to play a little hardball with these new construction builders trying to cut corners. So now with my clients, they were moving from Florida to Georgia. So I was the one over there all the time, taking pictures and videos and all of that stuff. So I'm so happy that they're settled and they're enjoying it. Thank you, Shantae. All right, let me go back up. I'm trying to get, we're almost halfway through, and I'm going to try to get all your questions, or a lot of them. All right, you guys. Always a lady said, come on, people. This is free 99 info. Step out of that chat and hit the like button. So please, and subscribe if you're not already subscribed. So I have 194 people on the chat. Go ahead and hit that like button. I should be close to 100 or close to 190 something. All right. Yeah, please like the video if you don't mind. Thank you, Always a Lady, for reminding everyone. Let me go back up. Okay. Thank you, Diana. Okay, I think I'm back where I was. All righty. Okay, for the most part, you guys, if for recommendations, I have Realtor Recommendations. Where do I have this? In my about, if you go to my channel and about, you can fill out something if you need a Realtor recommendation. I don't have as many loan officer recommendations. So what I usually advise you to do is to ask your realtor for recommendations for lenders, because they're people that they used in the past. That should be at least one of the 3 people you quote with should be a lender that your realtor recommends. You don't have to go with them, but that realtor knows that they can close a deal. They probably know that they have good customer service, that sort of thing. Most lenders get their business, a lot of them, get their business from realtors. So they make sure that they take care of their clients, their realtors' clients, their referrals, because they'll cut them off. If you mess over my client, I'm not going to send you any referrals anymore. So they generally will treat you better than somebody who just calls them on the phone and is like, I want to use you as my lender. So that's why I say that at least one of your quotes should be whoever your realtor recommends. Okay. All right, let me get down this list. All right, I already made a $36,000 down payment, I guess, on new construction. No way to get out. I went from $1,900 to $2,700 a month. Okay, so first, I would say this for everybody else. If you have some rate lock options, try to see what those options are now with your lender. The 3 questions you should ask is, how long can I lock my rate? And also, is there a cost to lock my rate for more than like 60 days? There typically is. And you have to see if that cost is worth the savings or what you think. So if you think the interest rates are going to go up to 6.5 and you want to lock in at 5.5%, then how much money are you going to save in your payment? When will you make that up versus how much they're going to charge you for locking your rate in that long? So that's one thing. Now, he said no way to get out. I would say there is a way to get out. You can terminate and lose your $36,000, but don't just assume that they can take your $36,000. Sometimes there are ways around this, because if you have a finance contingency in this loan, then you may be able to get out of it, because you cannot, if you qualify for the $1,900, you may not qualify for the $2,700, right? So you want an attorney. If you're at risk of losing $36,000, it's worth having an attorney look your documents over to see, can you save that $36,000? And prior to like this real estate market we are in, you could terminate, even if it said it in your contract. Lenders, larger lenders, would just give you your earnest money back. Now, I don't know if that's the case where you are, and I'm not sure that's the case in this environment. But you don't just hang up your gloves and say, I'm out to fight, right? So you want to be able to, I would definitely have an attorney, a real estate attorney, look it over to make sure all of your options, what they are. And then I would also just go to the on-site agent with my realtor and find out what my options are. I would go to corporate to see what my options are. I'm not just going to leave $36,000 on the table for, my house if I know I can't afford the $2,700 payment. Make sure you know all of your options. I need to get a real estate attorney to talk about this, making a note of it. All right. Okay. For the USDA questions, please, I have 3 USDA videos right now, so watch those. I'm ignoring the single question because I've been married for, see, y'all some new viewers to the station. I've been married for 17 years. So I've been married for a long time. All righty. And I met my husband when I was 19. So y'all can do the math. All right. Let's see. Raphael, you're back. Is it recommended to use a realtor that has a wife that's a loan officer? You can. I would like to separate the two, though. I don't want to usually use a realtor and a loan officer in the same place because I don't know. I've heard people that have had some issues with that. And then you don't automatically, that realtor is going to know all of your financial business, where they don't tell us unless you release that information for them to share that information. Realtors don't know your financial business, that your lender can't share it with us. So I would separate those two things if possible. Realtor, lender, because they're talking about you, even though they don't, they shouldn't. They're probably talking about you at home. So I would separate the two. All righty. Let me ask this. Hi, any advice for Breedy Cat? Any advice for working with a contractor who has purchased an old home and is currently renovating? Any things to look out for? I would look at before I hired them, I would look at their work that they did previously. I would only pay them after they finish. So you pay for the supplies with your own money, and then you pay the labor only. Like, you don't pay them. There's too many instances of people paying for things up front and then the contractor's not finishing the job. So you definitely need to have the practice of, you buy the materials and then you pay them for their labor after they finish the different steps of the renovation. And then I would, you're already working with them now, I guess. But so I want to see their work prior. I want to talk to some of the people that they've worked for in the past recently. And I know old, referrals. And then you only pay for the supplies, and then you pay them for their labor. Do not pay them for the job up front. There's no incentive for them to do the work. So those are my main things that I think you should be looking out for. All right. And if Breedy Cat, if you're a woman, have a man, and I'm telling you, just have a man somewhere through the negotiations, the transactions or something, because some contractors will assume that women are less knowledgeable about building and that sort of thing, and they take advantage of that. Same reason you would bring a man to like a car dealership or something, right? So that's my recommendation. All right. It's 1:18. Is there anything I want to talk about? Okay. All right, Beverly Howard. I saw that 203K loan. I'm gonna read it. I'm in Illinois. I own a 3-flat, owner occupied, no mortgage, but I'm having a problem finding a lender to do a 203K rehab loan. Is it something they don't like to do? Yes. Lenders don't like it. Contractors don't like it. So hopefully you already have a contractor. So you can get a 203K loan. For those of you that don't know, you can do a 203K loan for a house that you already have. So you can do so if you already own your house, you can take out a 203K loan to get it rehabbed. or when you're buying a house, you can take out a 203K loan. So either one. But it's very difficult to find lenders that participate, and it's very difficult to find contractors that participate. So I have 3 203K loan videos. One is a success story of a first-time home buyer using a 203K loan. So if you're interested in that, please watch it. Now, for you, you need to get around. There is a channel, I can't remember the name of it, but there's a channel on YouTube that's all 203Ks. They only talk about 203Ks, and I think they connect you with 203K lenders. So I would look into that channel. Also, I would start asking around to realtors and finding out who they know. Instead of looking like yourself, a realtor is closer to lenders all the time. I would start going to the realtors in your area and say, y'all know anybody that's done a 203K loan in the last 2 years? Because I found a lender that did a 203K loan and she didn't do one since, 20 years ago or something like that. So you want somebody who has done one recently and that knows how to do them, right? So I think realtors are going to be your best bet to find somebody that knows what they're doing with a 203K. All right, so I'm trying to answer some of your questions. I want to talk more about this, the pricing, the interest rates, and that being difficult. Let's see. This is a question I answer often. It says, do you have to fill out a new application for each lender? Yes. How much does that affect your credit score? If you do it within a short time period, and I say 14 days, if you Google this, it may tell you 30 days, but depending on what credit model is being used, sometimes it's 14 days and sometimes it's 30 days. So the credit scoring model allows you to shop your rate. So if you do 3 mortgage applications within 5 days, guess what? They know that you're shopping your rate. They don't assume that you're getting 3 different houses, right? So, and it only impacts your credit score once. So when you're about to apply, you've kind of researched your lenders, you say, I want to go with this person, this person, this person. You're giving them all the same information, but it is, you have to do one application, other application, right? So go ahead and fill those out, but it only impacts your credit once. Now, if you, in a 14-day, or you'll say a 30-day period, if you, do the application, then go buy your house, and there's like 2 months later, and you make a decision on one of them, then you're going to do another hard credit pull, 2 months later, and that's going to be a separate pull. But it's worth it. If you can save 0.5% over, say, 10 years, it's going to be worth the hard credit pull, because it's not like, oh, you're going to get one interest rate if your rate is 705, your credit score is 705, and you'll get a different interest rate if your credit score is 710. You get the same interest rate. There are levels of interest rate. So it's definitely worth it to get multiple quotes, even if it impacts your credit. So please watch, and I'm still going to post it in here, the video that I did about, I interviewed my clients for like resale, and he talks about him getting the six quotes. And it was Elijah. His name is Elijah. He gets 6 quotes. All righty, you guys. Let me try to get this one off of here. This is fun. Let me try to see if there's any other questions. Can I include the down payment and closing costs in the loan? Nope. They're going to want, sometimes you can roll your closing costs into a loan, but some of them, if not all of them. Because really, we're kind of asking, if you do closing costs, the house is $100,000, it appraises for $110,000. You could ask the seller to give you a credit for that, amount, but you won't know the appraisal amount. But you can ask the seller to give you a credit toward your closing. That's typically how it works. Now, the down payment, however, no, you can't roll your down payment. That would be basically, let's just get homes with no money down and no closing costs, and everybody would have a house because nobody has to put any money up, right? So typically, no, you cannot. All righty. But if you get, your down payment covered and your closing costs covered, say you got your down payment covered by a down payment assistance program and you got your closing costs covered by the seller, you could have zero out of pocket if you did it that way. But in a seller's market, that's very difficult to do. All right. Thank you so much, Christina. All right. Oh yeah, all the Christina stuff is up now. Yes, if you're not subscribed to Christina, please check her out. Do you have a video that breaks down every step of buying a house? Yes. Now, some of the videos I need a whole separate video for. So I have one video that goes over the 8 steps, and then I have another video that's like the appraisal video, one that's like the home inspection video, another video that's how to get your offer accepted. So those are broken up, and you can see all of those videos in my How to Buy a House playlist. So I do, Tracy. Thank you. I'll answer this question. I think commercial building will be rezoned to be converted into apartments since people will be working from home. Okay, that's not a question. All righty. Emmanuel, to God's 8 years. I cannot wait till you hit 500K. I'm hoping. Thank you so much. But y'all will help me get there, I'm sure. Thank you so much. All right, Christina's channel is just Christina Smallhorn. So if you put in Christina Smallhorn, it's going to pop up. All right, thank you so much, you guys. Thank you, Rye. All right, congratulations. I'm from New York. Woo-hoo. But y'all don't know, I'm from New York too. I'm from the Bronx, everyone. The North, I always say the North Bronx because the people are like, you're from the South Bronx? I'm from the North Bronx. But anyway, I'm from the Bronx. But I'm from New York City. I got a job offer in Atlanta and ultimately looking to purchase a home in the near future. What are some short-term renting options available in Atlanta before purchasing? You can do a long Airbnb. That's an option. It might be expensive, but you can do that. And then there are always short-term rentals in apartments. So if you go to any like apartments.com, they usually have corporate housing or like 3-month rentals, 6-month rentals, that sort of thing. So I would do Airbnb and see if you could, do a long-term rental with an Airbnb, or I would do like a short-term corporate apartment rental. All right. I got my mouth all dried out. All right. We're almost there. 30 more minutes. Hey, Shahida. Congratulations. Once again, I appreciate it, Ebony. I will be 45 next week, and I've always rented my whole adult life. All my kids are grown, but I always wanted to own my own home. What do you think? I say, go for it. Do it. So I don't know how many over 40, over 50, over 60 people that have contacted me and have bought a house since the pandemic started. So you're definitely in good company. I would definitely buy it. Why? You're going to rent for the next 60 years? Okay. You don't need to, if you can afford it, of course. But yeah, definitely do it. The kids are out of the house. You get to do whatever you want. Your house will be left exactly how you left it. Imagine that piece of like your yard and your house. But yeah, I say definitely go for it. Go for it at any age. The oldest client I had was 92. So I did a video about too old to buy a house. They cannot discriminate against you based on your age. Even if you take out a 30-year mortgage at 99, if you have the money to do so, they can't discriminate against you. So definitely buy a house. If you can get it together, it's one of the things that I can't even explain it, but people that buy a house at any time, it's like this peace that comes over you because you're stable. Like, this is my house. I don't have to, be at the whim of somebody increasing my rent or telling me I need to move or whatever it is. You're like, okay, I'm settled. You have like a sense of being settled, in my opinion. And there's a lot of joy that comes with that. So Ebony, I say go for it. If you're over 40 and you bought a house recently, please give her some encouragement in the comments. And if you're not already, Ebony, make sure, this is for everybody, make sure that you join my first time home buyers Facebook group. because I have a lot of like encouraging stories. People share their closing pictures every week when they close. You can get all of your questions answered. Make sure you're joining that group. Okay, let's look at this. Jacqueline, explain how a refinance of 30-year mortgage does after the first 5 years. Sorry, if you refinance with the same lender, do you keep the same interest rate or lower? When you refinance, it's whatever interest rates are at the time. So if they're lower, you refinance to a lower rate. If they're higher, you're refinancing to a higher rate, whatever that market rate is. And typically, you're doing another 30-year loan. So if you refinance, you could refinance to a lower term, like a 20-year mortgage, 15-year mortgage, 10-year mortgage, but you have to be able to afford that payment. Like with your debt to income ratio, you have to be able to afford that. So that's pretty much how it works. When you refinance, you're refinancing for whatever that rate is at that time. So if you have a 3% rate and rates are at 5%, that's what they're offering you, a 5% refinance. That's why when rates increase, people refinance less. But when rates went down to like 2%, 2.5%, 3%, everybody was refinancing. Now, like nobody's refinancing because nobody wants the higher rate. So be mindful of that, because a lot of lenders are quick to say, oh, you can refinance that. You can refinance that. If rates are higher, you're refinancing to a higher rate. But what they're assuming is 5 years from now, rates will be lower. But you can't, you don't know. All right. But they're assuming that, inflation will kind of, slow down and all of that stuff, and that rates will be lower. Thank you, Jacqueline. All righty. Have you ever heard of grant money running out? Yes. So, because usually all grants have, like, especially federal grants, they've allocated a certain amount to that grant. So when it's all used, it does run out. So yes, grants have run out. So apply before they run out. I mean, some of them are there's a budget every year for that grant, but don't assume that the grant is always going to be there. All right. I don't know exactly what, a lot of homestead questions are in the chat. I don't know exactly what your individual homestead will be, but if you go to whoever you pay your taxes to, they'll have the homestead information there. All righty. Thank you so much, Courtney Allen. Everybody, thank you for the 100K. You see right here, yay. And let me ask you this. I already did one with Christina Smallhorn. If there's another female, because I did one with Sir Ashley, I've done one with, can't remember, but I've done some males on my channel. So I'm going to have Christina. Are there any other female realtors you think I need to do a collab with? So put that in the comments so I can possibly reach out to them. All righty. Thank you. All right. All right. How accurate are the home price estimates on Zillow? They're going to be in the range, but if you've learned nothing from Zillow stopped buying homes based on their estimates being wrong. So they're going to be in the range, but they may not be that accurate, because they said themselves that their algorithm doesn't work because they were buying homes based on their estimates and they weren't accurate. So I would say that's going to be in the range, but it's not going to be what the house is worth. It's not an appraisal. Okay. So I wouldn't count on that 100%. All righty. How do I feel about IRA funds for down payments and closing costs? I know people are using them. I don't know if we're out of when they stopped having penalties with those. Generally speaking, I say don't do it if there's penalties, right, for you taking that money out. And plus, what are you going to be losing in potential earnings possibly by doing this? But I understand that some people do it. I think the closer you are to retirement, the less impact you're going to have, the less money you're taking out, the less impact you're going to have. A Roth IRA allows you to take out your contributions tax-free, I believe. So that might work better than a traditional IRA or a 401k. And again, it depends on how much money you're taking out. So if you could run that by a financial advisor to see if it makes sense, that's something you might want to look into. Points versus down payment. Less than 20% down and buy points, or 20% down and no points. Do the math on those. So you want to see how much it's going to cost you by paying points and how many points are you buying, right? And then, or unless you're talking about PMI, right? So I don't know if you're talking about, you mean PMI instead of points. So I have a points video and I have a PMI video. You may want to watch both of those so you know the difference. Does NACA work in the current market? It does. If you're on the NACA official Facebook group, you'll see people getting closing every day, every week. Is it harder? Yes, much harder. Because if people have multiple offers, NACA is not that attractive because it takes longer to close, and there's more things that can go wrong with a NACA offer than a traditional offer. So yes, people are still closing with them. Is it more difficult? Yes. And if you're not a member of the NACA official Facebook page, you should take a look at that. Thank you, everyone. All right. Sophia, I haven't heard from my realtor since March 16th. What is May? Okay, so the whole month of April, you haven't heard from her. That was the day I signed the new build contract. Went to the design center alone and waited on the ground to break now, but not a peep. See, this is what makes realtors look bad. So basically, you sign the contract and they're like, "Good luck, see you at closing." So you need to have a conversation with your realtor as to what the expectation is between now and closing. Because you're having a house built out here. So what should they be doing? So I would say that because really it may not be anything to discuss that much, right? Because they're building your house. But if there's an expectation that, for instance, that the realtor goes out to the lot, gives you an update on what's happening, what things look like. I typically would have gone to the design center with my clients, or I asked them at least, do you want me to attend the design selections? So you would do that and then have a conversation as to what's going to happen between now and closing, or now in the walkthrough. And so I think it is reasonable for maybe every 2 weeks for her or him to give you an update on the construction process. So what I used to do, I would go to the lot, take a picture. Oh, the slab is down, looks great. Oh, the walls are up, looks great. So stuff like that. Because there's really not that much that's going on other than the construction process. So that's what I would expect, that they kind of update you every week, usually every 2 weeks, on the process of the construction, and just checks in with you every 2 weeks. And then when you get closer to completion, that they're making sure all of your design options are in the house, that they're making sure they recommend inspectors to you, and all of those types of things when it gets closer to the end. All right, thank you guys. All right, so my recommendation, Malik, on how much you should save is 7% of the price. So you saying, congratulations, thank you. I'm looking to purchase a house this fall. I'll be a first-time buyer. I'm saving money. I should have about $24,000 by then. So my recommendation is 7% of the desired price. So of 25,000. Okay, 250,000 times 0.07 is 17,000. Is that right? And make it do 7 of 250,000. Yep, 17,500. So that's, you're right on target. The reason why I say that is because if you're doing FHA, or if you're doing a home ready, that's either a 3% or 3.5% down payment at the minimum. And then you're putting another 3% or so toward closing costs. So 7% is safe. You'll probably have much more than that, but I usually recommend 7% of the home price that you save at a minimum. And then if the seller contributes to your closing or anything like that, you'll have more money on hand. But you should be good. If you want to put 5% down, then you may want to save like 8% or 8.5%. Thank you, Joy. Thank you for watching. All right, I'm trying to get a few more questions in these last 20 minutes. Okay. Should a buyer be in the pre-approval stages of the loan before they hire an agent? Okay, I like for you to, if you don't officially hire an agent, I like you to at least have an agent in mind so you can get at least one of their referrals for a lender. Because in my 8 steps is realtor first, then lender, because I want you to get at least one of their lenders as a referral for a quote. So, but a lot of people do it this way. Now the agent may not take you on as an official client until you're pre-approved, because they don't know if you're going to qualify or not. So they're not going to waste their time necessarily, starting looking up houses, taking you to houses if you're not pre-approved. But you can kind of reach out to them. I'm, working on my pre-approval. I would like to, meet with you. Do you have any recommendations for lenders? And they can give you those recommendations at that time. But so either way is fine. But if you go to the agent ahead of time, you could probably get one of their lender recommendations. All righty. All right, y'all having some good conversations in the chat. I'm gonna try to go because I'm at like 8:30 in the chat, so I gotta be some more. Okay, all right. I think I'm almost caught up. Oh, somebody got some adult dating sites. I gotta delete that. Block user. Okay. Looks like you have bots. Thank you. I found it. Okay, I promise y'all, I learned something from Christina's live. Like, she has her husband behind. Now, my husband is making sure my kids don't make our kids don't make so much noise. So that's his job. But I need somebody to moderate this chat for me next time. All right. Okay. Let me see. I'm going back up because I'm almost at the end. Do you recommend an outside inspector? Yes. I recommend 2 inspections for new construction. One before they put the walls up, because then they are looking inside the walls. They're looking at the plumbing, the electric, everything that's behind the walls before they put the walls up. And then after they put the walls up, that'll be your final inspection. So for new construction, I recommend 2 inspections. One pre-construction, one after the home is complete. But if you say you don't build from the ground up, you came later, definitely get an inspection, a final inspection at the minimum. At the minimum, everybody get a final inspection. Because even because I've had a client who they did the pre-inspection, they did the final inspection, and they still had a problem with the plumbing. And even though it was under warranty, it took, for them to fix the problem, it took the warranty, the plumbers and everything, it took them like months, like maybe a month, 3 weeks, a month to finish fixing it. And so you have these people working in your home. They do not put you in a hotel. They do not pay, this client worked from home. So they are under warranty to fix the problem, right? And I went to like 3 lawyers for this client just to make sure she couldn't get reimbursed. And they said the only obligation they have under the warranty is to fix the problem. But they weren't under warranty to, put her in a hotel or to anything like that. So the problem got fixed because she had a new construction warranty on all the major systems. But imagine workers being in your house for like weeks trying to remedy the problem. They had to take up flooring, cabinets, take out walls in a room. That's an inconvenience that you don't want to have. So even though things are under warranty, you still want to try to catch things that can be caught prior to closing. So all of those things can be taken care of before you move in this house. You paint the walls, you put your furniture in it, you put your kids in it. Now this client didn't have any children, but imagine them taking one of your children's rooms and saying, you can't be in here for 3 weeks, or y'all can't be in the kitchen during this time. So that's why you need to make sure those things are taken care of before you move into the house. So the answer to that question is yes. All right, I'm kind of going to the end of this. How often do I go live? I go live, like I realized that I go live a lot less than other YouTubers. And a lot of that is just situational. Like I'm a mom, both of my children are in elementary school. So, and the majority of the time that you guys are online is in the evenings. And that's like, bath time, dinner time, all of that. So I am going to try to go live more often, but I go live like, situationally. Oh, I'm at 80,000 subscribers. I'm at 100,000 subscribers. I'm going live. But I will try to go live more often, maybe every other week or something like that, just to answer your questions. Because I do like doing it. It reminds me of being like back in class, but it's just situationally, I got to get kids to sleep. I got stuff to do. My husband comes home from work. They don't know I'm a famous YouTuber. Like they don't know. And I'm like, I'm famous. I'm on YouTube. They're like, Mommy, what's for dinner? They don't really care. Okay. But yes, I will go live more often for this year. Okay, let's see if there's any other questions. KB, what interest rate you're getting? I got a 4.9 interest rate, and I have been hearing that refinancing later can give me a lower rate. But how much of a percentage rate would make it worth it? Good question. Usually, it only makes sense to refinance, at least usually when you're getting at least 1% difference. So 1% interest rate drop is usually worth it because there's a break-even point. They don't refinance you for free, okay? They refinance you and there's a cost. There's a whole closing and everything. Like you're closing a whole new loan. So your refinance costs money. So you're going to have a break-even point. So say your refinance costs you $7,000. How much time will that 1% decrease? Say it saves you, I don't know, $90 a month. How long until you make up that $7,000? So there's going to be a break-even point. But typically in this, in the mortgage industry, real estate, they tell you to not refinance unless you're saving like a percent, going down at least 1%. But that might vary a little bit, but typically that's what it is. So you would have to wait and say, okay, when are rates going to be 3.9 or 3, in the threes? And then you would probably look at refinancing. But great question. Yeah, I gotta find where it is. Just 2 years ago, rates were at 2.8. That's crazy high, but that's like, those are the rates. Like 4.9. I know people are getting in the 5. Seems low right now. This is probably the fastest rates have gone up because people were getting in the 3s probably in February. So we got April, March, April, May. So 3 months, interest rates have gone up significantly. But yeah, so with the Fed raising rates, plan on rates continuing to increase as the year progresses. All right, if you are in need of a realtor, then I have in the About You section, I have and I need to just put it on my website. My website is shahidahill.com. But if you need a referral, I have a referral link in the About Me section if you need a realtor of my YouTube channel. All right, well, I also have, let me do a little plug for my course. So all this month, in honor of my 100K, I'm discounting my first time homebuyer course. It's going to be $49. It's normally $99. And it basically takes you through every step in detail with checklists so you don't make any major financial mistakes through the home buying process. It's pretty comprehensive. It's, Shahida style. It's my videos with no ads, right? And some other videos. Like I made videos for every section. And then there's a checklist for each section. So you're going to get like a sample appraisal report. You're going to get sample HOA documents and covenants. So basically you see a sample inspection report. You're going to be able to see everything before you actually, go through the process. So you're fully prepared for home ownership. And people are like, well, how do you know everything? Because you got my course, right? So if you think my videos are good, then you probably will definitely think that this course is good. It's just very comprehensive. So you know what everything looks like ahead of time. I'm going to put the link in the description if anybody's interested in that course. But yeah, it's $49 all month long, all all May. All right, so we have about 10 more minutes. Do I have a realtor in the Bronx? I've been so outside of the Bronx. I probably do. My sister still lives in New York. So again, if you fill out that sheet, I can find you a realtor in the area. I do have a Bronx realtor. I do. But I need you to fill out that form and then tell me what area you're looking for an agent in. Thank you, everyone. I'm trying to go back through to see if I missed anybody, because I'm sure I have. Closing in June, Geek Girl. Congratulations. Let's see what Smiley says. Does it actually matter if you catch issues like plumbing before closing? With this super crazy seller's market, means that you may find stuff you have no real negotiating power as a buyer, even if you find stuff. That's not necessarily true. Buyers or sellers, for the most part, if they choose your offer, then that's the offer they're dealing with at the time. So if you find a plumbing issue, especially if it's an expensive one, I always say, I have a video about how to negotiate repairs, but if I do an inspection and they say there's a plumbing issue, I'm going to get a quote from a plumber as to how much that is going to cost to fix. And if I give that to the agent, it's like a $10,000 plumbing repair. By law in most states, they have to disclose that defect, right, in that house to every other buyer. So they would rather just go ahead and deal with me sometimes than to deal with having to disclose this to other people. Because once they're aware of something that needs to be fixed, they are, by law, usually they have to disclose it to the public. So a lot of times, if they do choose your offer, then they have to deal with you. So, I mean, those still, in the negotiations, you can still work on that. Unless you said, I'm buying this house as is, I'm not going to ask for any repairs, then those things are still negotiable. All right. Good question, though. Let me see. Thank you, Sophia. I'm in Atlanta, Mr. A. I'm in Atlanta. Do you do real estate in multiple markets? I don't, but I probably need them. I don't, but I'm only licensed in Georgia. And I know there are some agents that are like, oh, I do Los Angeles and New York and Miami. Like, how can you really serve? Unless you're really flying to these places a lot. I guess you use like agents in that city to help you with that. But I think you really need to be hands-on for the most part in the city that you're serving. So yeah, I'm only licensed in Georgia, and then I refer people out. And I don't even take that many individual clients anymore. So I'm referring you out to clients in the metro, to other agents in Metro Atlanta. Unless you're moving close to where I live, then I may take you as one of my clients. But no. So the answer is Atlanta market, and no. But I'm trying to work. I do have referrals around like the United States for the most part. It's mostly in the Southeast that I'm referring you to, but I do have some like California, Texas, North Carolina. So if you're looking for Texas, North Carolina, New York, California, Houston, Dallas, all of those places I have a referral for the most part. But I'm trying to get all 50 states. So just let me know. If you're a part of my first time homebuyers group, then you had a really good agent, I try to get your agent into my my referral list. Okay. I think I've answered most of the questions. Let me check down. If you didn't get your question answered, make sure you put it back in the chat real quick. I might see it. Okay, what can I do to increase my credit score quick? Watch my video. I have a credit. The major thing that you can do that's going to raise it the fastest is for you to pay off your debt to under 50% of your available credit, 30%, 10%, or ask for credit increases, and that will to get you to that same place. So that's going to raise it the fastest for the most part is for you to have more available credit, either through raising your credit limits on all your credit cards or paying down your debt. That's going to raise it the fastest. And then getting any like 30-day late, 60-day lates off of your credit report. If you can get those things removed, that will increase your credit quickly as well. But I have a how to credit score, how to get a perfect credit score playlist. I would watch that. Okay. Let me see. Somebody just put something in the how to get 800 credit score. Yes. I have that in the playlist as well. So I have a credit score playlist. Watch that, please. Okay. I'm trying to get, I have a link to all the real estate courses that I recommend in every video. So every video, if you scroll down, I tell you what real estate course to take. Okay, where's the playlist? It's when you go to my channel, and I think there's like videos, playlists, like they're all kind of together. You can just click on playlist and get the playlist. Just go to the main channel. The main channel, Shahida Hill, YouTube. That main channel has videos, then playlists, and you can find all the playlists. Let me see. Bria, a builder in Atlanta is starting construction after pushing things back a year and just decided to pick apps by lottery. Ooh. Anyway, the realtor can fight for my position since I applied last year. They can ask, but yeah, builders are doing a lot of things differently right now. So it's really about relationship. I would have my realtor show up, in the office to see if they can get, anything more like by not just calling or emailing. They can see their face and they know who you are and that sort of thing. That could help. Relationships are everything. So sometimes when builders know you and on-site agents know you, that can help because it may not just be a random lottery a lot of times. So that's what I would suggest that your agent does to kind of help you with it. But it could be truly a lottery and they don't. I would say with interest rates going up, a lot of the people who might have started out wanting to get those homes may have either found a home by now or have gotten off the list due to affordability. So you may have, if you're still able to qualify, you may have a better chance of getting your application accepted. Okay, high current comment. I'm picking my last question. Who's it going to be? Let me see. Does anything to do with the lender to decrease it? No. I guess it'll be my last. Ibrahim. Okay, what can you do when your lender tells you he or she is going to do a soft pull, but ends up being a hard pull? There's probably not much you can do unless you have it in writing. Maybe you could complain to their manager that they said one thing and they really did something else. But I doubt they put that in writing for you. So I would say more than typically when lenders are doing an application, a mortgage application, it's a hard credit pull. Unless you're already under contract and they're doing maybe a soft credit pull for some reason. But if you're doing a mortgage application, count on it being a hard credit pull. So I would just ask them if, to explain why they did it. All lenders have managers or supervisors above them. You could complain to them. You also can ask them to remove the hard credit pull from your credit. They have those kinds of things that they can do as well. Those are the things that I would do. I would ask them to see if you can get it removed, especially if you have it in writing that it was going to be a soft credit pull. If that doesn't work, I would go to the lender's manager or supervisor and ask for the same. And then tell them that you're going to do like a bad review because this is, it's bad customer service. They said one thing and did something else. All right. Thank you so much, everyone. If you want to get my course, please, it's also linked in every in every video as well. Thank you so much. Thank you. I got my voice still a little bit. Thank you for the 100,000. Thank you for your support, liking my videos, sharing my videos, and again, trusting me to guide you to home ownership. This is Shahida Hill, getting you over the hill to home ownership and helping you confidently buy your first home. Good night, everyone.